Welcome, everybody, to another episode of the Tech Guys Who Invest podcast, where it's our job to help teach you how to invest wisely and safely. And speaking of, if you caught part one of this series, this is where we're going to talk and celebrate Adam's success on closing on a 59-unit deal. So if you missed out on that first episode, check it out. It's a couple episodes back. And Adam talked all about the mindset, what type of a mindset you need to succeed when investing in a 59-unit apartment complex. And today I'm going to pick Adam's brain about the process from making an offer to closing so that you have an idea and an understanding of what to expect if you are in the market or in the process of thinking about investing in multifamily apartments.
Yeah, awesome. I'm really excited about this.
All right, Adam. So let's walk us through it. The highest level, and I think we can dive down into each segment, but at the highest level, how does this process work?
Okay, so let me level set with where I came in, because I actually came into this deal I would sort of describe it as midway through. If you think about the life cycle of a deal, there are lots of phases and things that happen, and there are lots of ways to get into a deal like this onto a team. And so what I'm going to explain is my experience and how I came in, and this may be the way some people would like to try to get into deals themselves. They may try to follow a similar path, or they may follow a different path. They may come in a different way. So for example, the two guys who are the managing members of the team, Nick and Viano, they found the deal and put it together. So, I mean, they did the really hard work. Like they found this deal. They figured out a way to get creative and put several properties together to make it a bigger portfolio where they could capitalize on the economies of scale. And so the numbers started to make sense. And they figured that stuff out. And then they put a team together to help them get it over the line. Because in multifamily investing, when you're talking about bigger apartments, 50, 60, 70, 80 units and above, you really need a team. And so those guys, they were really good at certain parts of it, but even the best people need a team to get the full deal over the line. So what they did is they did all of that stuff I just mentioned. They got the thing under contract, and they started going through due diligence, which is where you start to validate all of the things that the seller told you about the deal, and make sure that you have all of the facts and the deal, doesn't have any surprises and everything still looks good. And then they started to look for bringing capital on, because you're financing part of the deal with the bank, and you're bringing capital into the deal to bring some equity to the closing table as well. So that's where I came in. Nick and I had made a connection in the past. We started a relationship because we both were in this business. We were both hustling and trying to get a multifamily deal done. And so he reached out to me and said, Adam, we've got an opportunity to bring a partner on who can help raise capital, also help in other ways with the deal and bring some skills into the deal. He knew I was a businessman and some of the skills that I have to bring to bear. And thought I would be a good addition to the team. So that's where I came in. One thing I think, yeah, man, it was awesome. One thing that maybe we could touch on at some point during this episode is all the hard work I did to have that opportunity appear. Like, that opportunity didn't just appear because I was lucky.
I like that. So you created your own luck based on that work. And we can definitely talk about this in this episode, or if we run out of time, we can talk about another one.
Awesome.
But I want to backtrack and make sure I understand. So the partners that you mentioned at the beginning, they're the ones that did most of the heavy lifting.
Oh, yeah.
Brought you in kind of towards the middle of it where they needed to get pushed over the finish line.
Yeah, that's right. And it's a win-win, which is another cool thing about this business. As you know, Kevin, it's, you look for ways for everyone to win, and there's enough to go around. It was a win for them because they got a new member of the team who contributed to helping get the deal done and make it all work from that point forward. In addition to bringing capital into the deal, I raised capital and brought that into the deal from investors that I brought in. Uh, it worked for me because it allowed me to get onto a team, to start to learn how to take down my first big deal, and to get the experience I was after. That was more important to me than the money I was going to make or the profit from the deal. Honestly, the experience was what I was really after.
And you got that. You got the experience of raising the capital, putting everything that we talk about into action, and seeing it come all the way to fruition. So that's awesome.
Yeah, it is cool. And I'll be honest with you and the listeners, this isn't exactly how I thought this would all go down, which is kind of cool. Because I'm doing my affirmations, and I've got my vision board and all of these things. I just knew I was going to do a deal, but I always saw myself as more in Nick and Viano's position. I saw myself as driving the deal, being the one who finds it and puts it all together and brings the team together. But that's not exactly how it worked out, which is okay with me, because I'm like, this is a great opportunity to learn and come and be part of it. So one way or the other, it doesn't really matter how you get yourself onto a good team to do a deal. But if you can bring some value and find a way to add some value to a team, you can get on a team and take down a big deal like this and get tons of experience.
Absolutely. And I love that. I love that you're saying bringing value to the team. Now, to break down the process a bit more, when you say Nick and Viano got it under contract, can you explain what that means to our listeners?
Yeah, so they're working with brokers. They're doing a lot of the exact same things I was doing. Honestly, they're marketing, trying to find leads for apartments that are for sale, working with brokers, working with people in the industry, networking heavily, and they found a deal that made sense. They actually they put it together. What ended up happening is there's another investor they know who's a syndicator who had some of the properties in the portfolio. They had some other ones, and they started talking, and they realized they were kind of competing against each other. And they said, what happens if we stop competing, we join forces, and we combine this and make it an even bigger portfolio, and then expand our team a little bit and get this thing over the line as a much bigger portfolio. And that's what they did. And it started out as an 81 unit deal.
Right. That's right.
And so for until about 2 weeks, actually maybe even a week before closing, it was an 81 unit deal. I thought I was going to be sitting here talking to you about an 81.
But it still worked out to bring you one step closer to financial freedom.
Absolutely.
So they work with the brokers. They are running some of the high level numbers. And my assumption is, and my understanding is, they would provide some type of a indicative offer to showcase that they are serious about moving forward with it. And it's contingent upon certain things. Is that a fair understanding?
That's exactly right. So they analyzed the deal, and they came up with some numbers that would work. They submitted what's called an LOI, a letter of intent, and that's basically an offer saying, we have an intention to buy this property for this amount. And then it allows you to start some negotiations without filling out all of this paperwork and getting into the contracts yet. So that starts the ball rolling, and then you start negotiating with the sellers, which they did. These sellers were out of the country. They're based in China. And so there were some interesting negotiations that were going on across continents. And once they all agreed on the terms of the deal, which includes the purchase price and all of that kind of thing, they signed contracts. And then at that point, they're actually under contract. So that's kind of how the process works.
Okay, so then they get under contract. They formally approach the due diligence, getting more into the details with it. And then if something arises, let's say you need new roof, I'm just throwing that out there, then you would take that and use that as a negotiating chip. Is that right?
Yeah, that's right. So it's not a good idea to plan to do what they call retrading, which is a term for just making a lowball price coming in with the intention of renegotiating because you pretend like you find something, and that will get you blackballed pretty quick, and you don't want to get a bad reputation in these circles because it's kind of a small community when you start to play. But if you get into due diligence and you find something that legitimately was not known and there's a reason to renegotiate, you do that. So that's what happens. You get all of the financials, you start property inspections, and you go physically inspect every single unit. It's super important that you look at every single unit, no matter how large the property. And you start building a list of all of the things that you're going to have to do. So you're not only looking for the expenses that are going to be involved, because our business model involves improving the properties that forces the value up.
Yep.
So you want to know all of those costs and things, but you're also looking for things like unexpected and hidden costs that aren't part of that you didn't know about. And if you find major things like we just talked about, you could go back and negotiate some of that.
Okay, so what sets your offer from another investor's offer? Would it be the relationship? Would it be the numbers? From your experience, what do you think that would be?
I'll tell you, I think probably the most important thing, honestly, is the ability to close it. And that's why it's so hard to break into this, honestly. I think that's one of the biggest barriers to breaking into large multifamily investing. You've got professional investors out there, people who do this for a living, and they've got a track record. They have closed on multiple large properties in the past. So they have demonstrated they can get it done. They can close the deal. There's so many things that can go wrong and so many reasons why you may not be able to close. Like, for example, maybe you can't raise all the capital you need. You need to bring a certain amount of capital to the table. And if
Sure.
you can't get that done, you cannot close the deal. Or it could be other things too, but that's just one that comes to mind. It's the ability to close. So convincing them that your team is good and professional and can close the deal is a huge part of getting that done. Also, the experience of your team is factored in. Some of it's for that reason, and some of it is just because they know you understand how the game works and you're not going to hassle them with things that an inexperienced person would. And then there's price, of course, and there are things like the terms. Are you going to have to get financing of some sort? Is it financing that you're likely to get or not for some reason? All of these kind of things factor into what makes an offer attractive.
Now, speaking of capital, I want to break that down a bit more as well, because I'm thinking there could be this thought where you're raising all cash, which is definitely not the case. It's unrealistic, and it's definitely not a good investment or use of that. Okay. So is it fair to assume that leverage is involved?
Yeah, it's fair. And most syndicators in the larger deals are using leverage. At least that's my understanding.
I would assume so too.
I could be wrong, but the people I talk to do. Most people are not trying to raise, 5 million or whatever it is, 20 million, I don't know, to pay cash for a deal. They want to leverage the bank. It's smart to leverage the bank.
And if you do your numbers right, then the debt service is it's already accounted for. So you'd still be achieving the cash flow and the returns with the leverage in mind.
Yeah, it's built into the deal. It certainly is. It's factored into the deal. It's factored into the forecasts that you're providing to investors when you're seeking capital investment into the deal.
Okay, so now the capital then, is that when that's said and tossed around through syndicators or through when you talk about it, for example, that is in reference strictly to the down payment then?
It's a combination of the down payment. You might raise capital for things like some fees or upfront costs of things you need to get done, or you may come out of pocket with that through your team. It's an option. It would include rehab costs a lot of times. Sometimes the bank will let you have some of that in your loan. Other banks won't. There's so many variables involved. But yeah, it's going to be for those things. Okay.
So just to recap where we're at this point, they found the deal through the relationships they had with the broker. They started doing the due diligence. They said, all right, this is going to make sense. We can get it under contract. They ran the numbers. Let's make this offer. Once the offer is accepted, it's almost contingent upon other things that you find. That's when they start doing the walkthroughs, and that's when they get serious about raising capital, which is where you were brought on.
Yeah, that's exactly right.
All right. So now moving forward, all the capital is pooled together. Then what's next? How does that process go from the capital to closing?
Okay, so good question. First of all, there's a ton of work involved with getting the capital raised. So that's where my hard work really began. I was working hard to find investors who are interested in investing in the deal, and once you get them committed, you work on getting everybody kind of coordinated to wire their money at the appropriate time, and we sign paperwork. You know, they're legal contracts that you sign, that your investors sign as limited partners in the deal. There are lots of different ways that can be done a lot of the time, and with this one, we all became part of a company. And the capital investors that invested with me through me into the deal became limited partners in the company. So they had to sign that paperwork that our lawyers had put together for everyone. And then when the appropriate time came, they wired their money from their bank into an escrow account, and the money was there in the escrow. And Nick and Viano went to the closing table and signed the documents they needed to sign on closing day. And the money was transferred to the sellers, and the property was deeded to us, and we became the owners.
Awesome.
Yeah. And we celebrated. Woohoo!
And you should have, because all your hard work paid off in the end 59 times over, right?
Yeah,
so
right.
For the capital, I know that we're definitely not going to get into the nuances of that versus, an LLC versus a fund or anything like that. A, because that's not our expertise, and B, we are not qualified to. So it's interesting to hear how that was done on your end, because I know that it can be done in a variety of ways.
Yeah, it can. And we essentially relied on advice from our legal counsel. And
which is what you should do.
Exactly. That's why we're paying them the big bucks.
Exactly.
You tell us what to do, we'll follow your direction.
The last thing you want is, this paperwork or this procedure that you did was wrong, and it negates everything that you've done.
Right. The attorney fees are really pretty high, but it's worth every penny. It is totally worth it, because they are doing a lot of work to legally structure everything and protect everyone involved.
Yeah, they're covering the backs of the investors, because it's not your job to know all those legal nuances, maybe at the highest level to understand how that works. But even then, that's the tremendous value that they bring. And I'm sure it helps you sleep at night.
Yeah, absolutely.
All right. So now that you guys closed, you have the deed, meaning you have proper ownership of it. What's next? What is the plan, if you can share that with the listeners?
Yeah, it's execution of the business plan. We're operating now. So we have a business plan that was part of the deal, and that's part of what we shared with all of our investors, and one of the reasons they were excited to invest with us. So now what we're doing is we're executing that plan. We're our property manager, who we partnered with, took over the management of the physical property, and they are helping us carry out our plan to evaluate the tenants that are there. We're basically kicking the riffraff out. We're improving the units that they occupied, making them nice, bringing in a higher class of tenant, and then, as others naturally turn over, we'll improve units, shift them into there, improve old unit, and just begin that process of improving the entire place. We're already beginning to get contractors in there to improve the exterior and the common areas and make that nicer. So we're essentially taking a building that used to be not a great apartment complex and making it a pretty nice one. And the area is gentrifying, so we won't over improve it. We won't improve it outside of what you would expect in the area, but we'll make it among the nicest you'll see in that area. So people who live in that area and want a nice place to live, a safe place to live, can come to us now, and we're going to offer a lot of value for them.
I love it. I love it. So with the last piece of the last part of this conversation that I wanted to ask you with the remaining time we have is, what would be your piece of advice to somebody that was in your shoes, or even before you were in this deal? What advice would you give yourself that would help maybe progress it faster, better? What do you think? What would you say?
So a lot going through my head here. If you're in my shoes, where you really want to be an active multifamily investor, which is a lot of work, I think the way I did it is a great way to do it. Is find a place you can add value. Which for me, like I said, it was raising capital, but also bringing some of my business skills from the corporate world into the team and helping with some of my transferable experience. Finding a way to add value to a team and connecting with them and getting into a deal that way and just being part of the deal. You don't have to be the one who owns it all. I mean, no one owns it all. That's the thing.
Right.
Like, it's a partnership. They have more of a share than I do, but they deserve it. I mean, they did more of the work. But you don't have to be that guy, especially in the beginning. That's what I learned, is just find a way to add value to a team, become part of the team. Don't worry so much about what your cut is or your percentage. Get in there for the experience and soak it up like a sponge and learn everything you can. That would be my advice. The other thing is, I was thinking a lot about the investors that I brought into the deal, who are essentially people who work a day job. They're investing with either some money they have saved for investing, or through a self-directed retirement type plan where they've shifted some money from a 401k or a Roth IRA into a self-directed account, and they can invest with me that way. And I was thinking, if you really just want to diversify your investments and invest in some real estate, that's a really great way to do it. I mean, so if you're not interested in being active and doing all that, but you just want a way to invest, that's a great way to do it, is what my investors did in this deal with me. So those are two different sides. Some people want to be super active and work really hard because they like this business like I do. And then the advice I gave is good for them. And the other side is those more passive people. Find a group of syndicators who's doing a deal. And if you're comfortable with the numbers and everything is great to you, you could consider investing with them passively.
All right, there you have it. Adam, thank you so much for letting me pick your brain so we can, again, educate our listeners on the process of what it takes to close on a multifamily investment.
Awesome. Thanks, Kevin.
So if you have any questions about what you heard on the episode, feel free to reach us via email, techguyswhoinvest@gmail.com. If you want to learn about the investment projects we've got going on, same thing applies. Reach out to us via email, techguyswhoinvest@gmail.com. Thanks, Adam.